Hey everyone, George here. So I get asked this question every now and then, which is how long should I retain support for all my transactions, like receipts, bank statements, credit card statements, investment brokerage statements, mileage logs, invoices, all that. So today we're going to go over all that and when you can toss tax records and support and when you absolutely should not. So let's get started. So here's the thing with construction business owners. You're inherently higher audit risk than, say, a regular W-2 employee. And why is that? It's because cash flows are uneven, jobs span multiple years, you deduct a lot of vehicles, equipment, subs, meals. You deal with retainage, deposits, progress payments. That means that records matter a lot, like in your line of work, and the IRS expects you to retain them for a certain period of time. So you don't need to keep everything forever, but you do need to keep things long enough. So let's start with the foundation. The IRS statute of limitations is generally 3 years. That means the IRS generally has 3 years from the date you file a return to audit that return. Once those statutes are up, they can't challenge it. So at a very minimum, you should keep tax returns and supporting documentation for at least 3 years. But there is an exception to that. There's times when 3 years alone is not enough. So the IRS gets 6 years for their statute of limitation if you underreport your gross income by more than 25%. So for contractors, this can actually be a common trap because you made deposit checks late, you forget a 1099 income source, retainage is handled incorrectly. So at 3 years, it's not impossible that it becomes, say, a 6-year statute. So my professional advice on this is to retain your records for at least 6 years and not 3. Now, potentially even the 6-year can be argued and it can be open statutes if the IRS alleges fraud, in which case there will be no statute of limitations. That doesn't mean that mistakes equal fraud, but it does mean that sloppier record keeping will make your life a lot harder. So good records always protect you. So like to show you the difference, it's a night and day difference getting through an audit if you have support for everything properly lined up. It's a matter of asked and answered. They'll provide you the request list, you provide them the support, and everybody moves on their lives. Versus not having records, you have to provide explanations, hope they buy it, they sign off, and it just becomes a whole other level of getting through this thing. So let's talk about supporting documentation and things you should retain for, in my professional opinion, 6 years. So you should keep the following records for at least 3 to 6 years: receipts, expense logs, bank statements, credit card statements, invoices, proof of payments to subcontractors, mileage logs, and job cost reports. For contractors, the biggest hotspot audit issues tend to be vehicle deductions, meals, tools and supplies, and subcontractor payments. So the general rule is that if you deduct it, you need the proof. So any deduction that you're not able to provide support for can be reversed. Another thing to be aware of is that digital is totally fine, and I've already had an episode on this where I highly recommend just taking a quick snapshot, even if it's with your Apple or Google Photos, of any receipts over $75 if you don't have it on hand somewhere, whether if it's in Amazon or some sort of an online portal somewhere. You can use, in terms of apps, there's Expensify, Zoho, QBO has their own snapshot system. But I mean, if you don't want to have to deal with an extra app and opening it up each time, I just highly recommend just opening up your Google or Apple camera like in a matter of half a second and just taking a snapshot. That way, even with the AI nowadays, you can have receipts sorted by date. You can move it to a folder at a later time. There's a lot where you can do. I just highly recommend just any receipt, any expense over $75 that's not through Amazon or one of these online portals where you have access for a number of years. Just take a snapshot with your Apple or Google camera. It will make a huge difference in ever getting through an audit. So that's all to say that you don't need to keep the actual paper receipt of things. Digital is completely fine. So we just talked about regular, ordinary, everyday transaction type items. Let's talk about a few other asset types. So let's talk about real estate and job-related property. This is huge for contractors. So if you own a shop, yard, warehouse, a rental, or even a personal home with business use, you need to keep records throughout the duration of owning the property plus 3 years after selling the property. And why is that? Because improvements, additions, remodels, all this increases your tax basis in the property, which would lower your capital gains at a later date that if you were to sell the property. So you need to be able to prove the actual increased cost basis, like any cost of improvement that you make on that property. So if you bought a building for, say, $500,000 and you made $200,000 of improvements to that building, let's say you owned the building for 10 years and sold it at year 10, you would need to retain the support of the purchase of the building for the $500,000, and all the $200,000 improvements receipts support everything for even 3 years after sale. So if you sold it at year 10, effectively you would need to retain all the support for 13 years. So if you don't retain support for those $200,000 cost of improvements, in the event of an audit, they could disregard those improvements entirely and you pay tax on that $200,000. Number 2 category, bad debts and unpaid jobs. So most small business construction companies won't have this issue because they're mostly on a cash basis, depending what your prior CPA or advisor put you on. But if you are on an accrual basis, this might be a benefit to you. So if a customer never paid, a job went sideways, you ate the cost. The good news is that you could deduct the bad debts, but here's the catch. You can amend returns and claim these deductions for up to 7 years, but you need to maintain contracts, invoices, collection attempts like emails. So these should be kept longer than normal records, so don't shred these too quickly. However, again, this doesn't apply to most, at least my clients. If you're on a cash basis, this wouldn't apply to you. Next category I want to talk about are equipment and securities. So equipment and assets, think truck, trailers, excavators, skid steers, and any large tools. You really need to keep purchase records, depreciation schedules, and sale or disposal records for as long as you keep the asset plus 3 years from sale date. And why is that? Because depreciation errors are a top audit issue for contractors. And investments. So if you invested profits into stocks, bonds, or funds, you should keep records of purchase date, the price purchased at, any sales, and reinvested dividends. And same rule, ownership period plus 3 years. So really these investments would just be brokerage statements. It should give you all that information. And again, ownership duration plus 3 years. So what about IRAs and retirement plans? This one surprises people. So you should keep IRA and any retirement plan supporting documentation, including contributions, rollovers, RMDs, inherited IRAs, and Roth IRA documentation for, again, the duration and until at least 3 years from when the account is fully emptied. Yes, it feels like forever, but the thing is, retirement plan account errors surface like years, or even decades later. So to make full circle and bring this all home, my professional advice, my contractor rule of thumb: you should retain tax returns and support for 6 years, property and equipment until sold plus 3 years, bad debts up to 7 years, and retirement accounts until emptied plus 3 years. I hate sounding cliche, but it's always better to be safe than sorry. Storage is cheap, but settling IRS disputes is not. So if you're unsure of whether to toss something, maybe it's better not to do it, or you could always consult with a CPA, ask. If you have any questions, any of this applies to you, our email and calendar booking are down in the show notes. I hope you found this helpful, and see you in the next one.